my name is Sumit Jhunjhunwala, currently designated as Vice President and Sector Head in ICRA's Corporate Rating. Today, I would like to summarize the recent thematic on copper published by ICRA. So, ICRA expects the global refined copper market to remain in deficit through CY 2026, which has supported copper prices at multi-year high in the current fiscal. Copper prices have increased by approximately 40% since the beginning of the current fiscal, crossing $13,000 per ton in Jan 2026, driven by persistent mine site supply disruption, declining ore grade, and a shift in exchange inventories. Tariff-related uncertainty in the United States with potential import tariff under review in mid-2026 has led to a sharp buildup of refined copper inventories at COMEX warehouses alongside reduction at the LME inventories. This inventory realignment has tightened copper availability outside the US, providing support to global copper prices. Elevated copper prices, however, are expected to pose near-term demand moderation risks in certain markets. In China, despite strong refined copper production in 2025, the softening of the Yangshan import premium, a key indicator of Chinese buying appetite, indicates growing price sensitivity among consumers, with some end users deferring purchases at high price levels. In India, copper consumption has remained buoyant, expanding by an estimated 14 to 15% year-on-year in the first 7 months of FY 2026, supported by a recovery in industrial and infrastructure demand. However, ICRA expects that the current high copper prices environment could moderate the pace of growth to around 10 to 12% annually over the next 2 fiscals, even though the underlying long-term demand drivers such as investment in power infrastructure, renewable energy, electric vehicle and data center remain healthy. Thanks everyone, and stay tuned for our next podcast.